Welcome to this explainer. Today, we're doing something a little bit different. We're going to uncover the hidden gears and levers of public sector transparency. We're looking at the very engine of accountability, how governments and public entities actually report their finances. It's this invisible, absolutely crucial framework that keeps the entire system running. So, let me ask you this. How do you actually measure a government's success? I mean, really think about it for a second. Unlike a private business where the ultimate goal is just generating profit and returning equity to investors, a government's bottom line isn't just about cash in the bank. The math is much deeper and vastly more complicated.
Okay, so picture the private sector. It's totally profit-driven and funded by voluntary exchanges. You hand over money, you get a coffee. Simple. But the public sector? It's service-driven. It relies on involuntary taxes and non-exchange transactions. That means the services you receive, like national defense, public safety, or national parks, don't have a direct one-to-one dollar value equivalent to what you paid in. Because of this massive difference, standard corporate accounting just completely falls apart when you try to apply it to a government.
To wrap our heads around how public finances should be tracked, we're using the 2025 IPSASB Accounting Handbook as our guide. We have a clear 6-step roadmap for this explainer. We'll be covering 1. The public sector difference. 2. Who makes the rules? 3. Who are the users? 4. Beyond financial statements. 5. The 6 quality characteristics. And 6. Accountability in action. All right, let's jump right in. Section 1. The public sector difference. Moving beyond the profit motive. So the conceptual framework actually gives us 3 big criteria that make a public sector entity, well, public. First off, they deliver services to benefit the public or redistribute wealth. Second, they're financed mostly by taxes, transfers, or debt. And third, and this is key, there is no primary objective to make profits. So the crucial takeaway here is that if your whole reason for existing is to deliver social benefits, instead of making a buck, the entire way you report your financial success has to fundamentally change. Moving on to Section 2. Who makes the rules? The architects of global standards.
You've got the International Federation of Accountants, or IFAC. They're basically the global advocate for the accountancy profession. But here's the interesting part. They don't actually write the accounting rules for governments themselves. Instead, they publish the handbooks and provide the funding, human resources, and communication support to the standard setters, all while fiercely protecting those standard setters' independence.
So who actually writes the rules? That falls to the IPSASB, the International Public Sector Accounting Standards Board. These are the independent folks rolling up their sleeves to develop the actual IPSAS rules, which stands for the International Public Sector Accounting Standards. They build these comprehensive rules for both accrual and cash basis accounting, totally tailored for the public sector. The ultimate goal here? Making sure financial info from public entities across the globe is high quality and easy to compare. Next up, Section 3. Who are the users? For whom are these reports built? Now, you might assume all this dense financial data is just for, central bankers or bureaucrats. But actually, it's meant for everyday people. You're going to hear the term GPFRs, General Purpose Financial Reports. These are reports designed to meet the information needs of users who can't just demand customized financial data. Think of it like this. If a massive global bank is lending a country billions, they can demand custom audits. But you, a regular taxpayer? You can't. So GPFRs act as your primary, indispensable tool for public transparency. Because those primary users, that's us. It's service recipients, meaning citizens and residents. It's resource providers, meaning taxpayers, donors, and lenders who actually fund the whole shebang. And finally, it's our representatives in legislatures and parliaments. The framework explicitly puts you right at the center. It makes this entire accounting framework a literal tool for your own civic empowerment. Section 4. Beyond financial statements, the long-term impact of public finance. There is a line in the handbook that says the financial consequences of many decisions made in the reporting period may only become clear many years into the future. Wow, that really captures the generational weight of government choices, doesn't it? Governments outlive us all. So public sector reporting has to elevate the stakes. It can't just be a snapshot of today. It has to provide perspective, long-term information to show if our current policies are actually sustainable, or if we're just passing a massive financial burden down to future generations. Think about the physical stuff governments actually own. A national park, a highway, a military base. They aren't holding onto these assets so they can eventually flip them on the real estate market for a profit.
The main reason they hold these specialized assets is for what's called their service potential, basically their capacity to deliver public services. So trying to value these assets means we have to completely shift our mindset away from commercial resale value and focus entirely on their public utility. All right, Section 5, the 6 quality characteristics, the toolkit for transparency.
For these general-purpose financial reports to actually be worth anything to you, they absolutely must possess 6 essential traits. These characteristics are basically our best frontline defense against mismanagement and shady bookkeeping. We've got 1. Relevance, 2. Faithful representation, 3. Understandability, 4. Timeliness, 5. Comparability, and 6. Verifiability. Let's quickly break down how each one helps build an airtight reporting system.
First up is relevance. Look, the information has to actually matter. It needs to be capable of making a real difference in decision-making. It does this by having confirmatory value, meaning it helps us look back and see if past budget promises were actually met. And just as crucial, it needs predictive value, giving us a clearer picture to estimate future funding needs, tax rates, and service capacities.
Next is faithful representation. Simply put, the reports have to show reality. The data needs to be complete, neutral, and free from material error. And what's really fascinating here is the absolute need for prudence. The standard strictly warns that you have to be cautious. Assets and revenues can never, ever be overstated, and liabilities can't be understated. We need the cold, hard, unvarnished truth, not some rosy political spin. Then there's understandability. Let's be honest here. Transparency is completely useless if the reports are so full of convoluted jargon that nobody can read them. The standard demands that information is presented clearly and concisely. You shouldn't need a PhD in forensic accounting just to figure out how your local municipality is spending its budget, right?
The fourth characteristic is timeliness. Stale financial data is basically useless data. If you only find out about a massive, gaping budget deficit 3 years after the fact, well, that information has completely lost its capacity to help you make decisions at the ballot box today. We need this information fast enough to hold leaders accountable right now. Next up is comparability. This is the feature that lets you take your local government's financial performance and measure it against its own past years. Or even better, you can stack it up against neighboring regions or similar countries. It's the rule that ensures apples are compared to apples, making it super easy to spot trends, similarities, and differences. And finally, number 6, verifiability. This guarantees the data isn't just subjective messaging. It means that different, knowledgeable, independent observers, like external auditors or public watchdogs, could look at the exact same numbers and accounting methods and reach a consensus that, yes, this represents reality without bias. The math and the processes have to be rock solid. Which brings us to Section 6, Accountability in Action, tying it all together for you. So, what does this all mean for us? Well, the ultimate takeaway from this explainer is really a challenge directly to you. Do your local government's financial reports actually meet these rigorous global standards? When your city, state, or nation publishes its financial outcomes, are they really relevant, timely, and verifiable? Do they give you the complete, long-term picture of their service capacity? You know, the accountability engine only runs when we actually demand it. So take a look at your own local public sector with this new perspective. What do you think you'll find?